how to use the momentum trading strategy. Today we will show you how to use the momentum strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the momentum indicator created by French mathematician Paul-Émile Appel. Momentum shows the strength and direction of the trend, as well as the further potential of its development. How to set up momentum indicator for quick trades. Set the period to 10 to make the indicator more sensitive to short-term price movements. Keep an eye on the indicator line relative to the 100 level. Open an up trade when the momentum line rises above the 100 level. This is a signal that the price is gaining speed and may continue to rise. Open a down trade when the momentum line falls below the 100 level. This is a signal that the price is losing speed and may begin to fall. Combine momentum signals with other indicators such as RSI or MACD to improve accuracy. How to use the awesome oscillator trading strategy. Today we will show you how to use the awesome oscillator strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the awesome oscillator AO indicator, which was developed by Bill Williams and helps to identify changes in market dynamics and possible trend reversals. The indicator consists of a histogram showing the difference between the 34-period and 5-period simple moving averages, or SMA. How to set up the awesome oscillator for quick trades. Set the default parameters 5 and 34 periods. Open an up trade when the AO crosses the zero line from bottom to top. Open a down trade when AO crosses the zero line from top to bottom. Use the awesome oscillator indicator together with other indicators such as parabolic SAR or Bollinger Bands to increase the accuracy of signals. How to use the Schaff trend cycle trading strategy. Today, we'll show you how to use the Schaff trend cycle STC indicator for quick trades. This simple and effective tool created by Douglas Schaff helps traders identify trend directions. The STC indicator combines two methods of analysis, MACD and the stochastic oscillator, to detect market pivot points more quickly. The first method, MACD, tracks price changes over time, helping you anticipate when the price may start to rise or fall. The second method, stochastic oscillator, measures how far the price has moved from its normal range, indicating when significant rises or drops might occur. How to set up the STC on pocket option for quick trades. To configure the STC for quick trades, use the following parameters in the settings. Fast EMA period, 23. Slow EMA period, 50. Stochastic cycle period, 10. The trend cycle is limited to values ranging from 0 to 100. The STC indicator uses two key levels, 25 and 75. Therefore, set the buy threshold at level 25 and the sell threshold at level 75. Open up trades when the market starts an upward movement and the indicator rises above 25. Open down trades when the trend changes to a downtrend and the STC falls below 75. This approach allows you to respond quickly to market shifts and make trades with minimal delay. Use the Schaff trend cycle for quick trades, starting with a 5-second time frame. How to use the MACD strategy. Today, we'll show you how to use the MACD strategy for quick trades starting at 5 seconds. This strategy is based on one of the most popular indicators, the MACD, or Moving Average Convergence Divergence. The MACD indicator shows the relationship between two moving averages of the asset price. It consists of two lines, the MACD line and the signal line, as well as a histogram that displays the difference between these lines. If the histogram is above the zero line and the peaks of the histogram bars are consistently rising, then there is an uptrend in the market. If the histogram is below the zero line, the trend is downward. How to set up the MACD indicator for quick trades from 5 seconds. Set the fast line to 5 periods, the slow line to 13 periods, and the signal line to 4 periods. Watch for MACD and signal line crossover signals. If the MACD crosses the signal line from bottom to top, it is a signal to open an up trade, while crossing from top to bottom can serve as a signal to open a down trade. Use the MACD in combination with other indicators and market analysis to get better signals. How to use the ROC trading strategy. Today, we'll show you how to use the rate of change, or ROC strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the ROC indicator, which was first proposed in the works of Dr. Alexander Elder. The ROC indicator measures the rate of change in the price of an asset over a certain period and shows the percentage change in price, helping to determine the strength of the trend. How to set up the ROC indicator for quick trades. Set the period to 7 to make the indicator more sensitive to short-term price movements. Watch how the ROC line crosses the zero line. Open an up trade when ROC rises above the zero line. Open a down trade when ROC falls below the zero line. These signals indicate the beginning of a new trend. Combine ROC signals with other indicators such as RSI or MACD to improve accuracy.
How to use the Bollinger Bands trading strategy. This strategy is based on the use of the Bollinger Bands indicator, developed by John Bollinger. It consists of 3 lines, a moving average, and 2 outer lines, which are adjusted according to market volatility. These lines expand when the market is volatile and contract during calmer periods, helping to evaluate market dynamics and potential price reversals. How to set up the Bollinger Bands indicator for quick trades, starting at 5 seconds. For short-term trades, use a period of 20 and a deviation of 2. When the price reaches the lower line and starts to rebound, you can open an up trade. When the price touches the upper line and starts to recede, open a down trade. Use Bollinger Bands with other indicators such as RSI or MACD for more reliable signals.
How to use the Candlestick Engulfing strategy. Today, we'll explain how to use the Candlestick Engulfing strategy for quick trades starting at 5 seconds. This strategy is based on a candlestick pattern that signals a potential trend reversal. The pattern occurs when a new candlestick has a larger body than the previous one and moves in the opposite direction. This new candlestick is called engulfing candlestick, indicating that the trend may be about to change. The larger the engulfing candlestick, the stronger the potential movement. How to use the candlestick engulfing strategy. First, identify a candlestick that is larger than the previous one and moves in the opposite direction. Wait for the formation of a new candlestick to confirm the signal. If the candlestick is moving upward and engulfs the previous one, it's a bullish signal. Open a buy trade after the closing of the confirming candlestick. If the candlestick is moving downward and engulfs the previous one, it's a bearish signal. Open a sell trade after the next candlestick confirms the move. Use the candlestick engulfing strategy along with RSI, MACD, or moving average indicators. How to use the SuperTrend trading strategy. Today, we'll show you how to use the SuperTrend strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the SuperTrend indicator, which was developed by Olivier Seben and helps to identify trends in the market. How to set up the SuperTrend indicator for quick trades. Set the ATR period to 10 and the multiplier to 3. Open an up trade when the price crosses the SuperTrend line from bottom to top. Open a down trade when the price crosses the SuperTrend line from top to bottom. Combine SuperTrend signals with other indicators, such as moving average or ADX, to improve accuracy. How to use the Ichimoku Kinko Hyo trading strategy. Today, we will show you how to use the Ichimoku Kinko Hyo strategy for quick trades starting at 5 seconds. This strategy is based on the Ichimoku Kinko Hyo indicator, developed by Japanese analyst Goichi Hosoda. Ichimoku helps traders quickly identify trend direction, support and resistance levels, and potential reversal points. The indicator consists of multiple lines that provide a comprehensive view of market conditions. Tenkan Sen, short-term line, shows the average price over the last 9 periods. Kijun Sen, medium-term line, shows the average price over the last 26 periods. Senkou Span B, cloud boundaries, represents the cloud, indicating potential support and resistance areas. How to set up the Ichimoku Kinko Hyo indicator for quick trades. Set the default settings: 9 for Tenkan Sen, 26 for Kijun Sen, and 52 for Senkou Span. Open a buy trade when the price crosses the cloud from below. This indicates an upward trend. Open a sell trade when the price crosses the cloud from above. This signals a downward trend. To increase the accuracy of signals, use Ichimoku together with other indicators like RSI or moving average. How to use the Tweezer trading strategy. Today, we'll introduce the Tweezer strategy for quick trades starting at 5 seconds. The Tweezer is a candlestick combination or pattern that signals a potential trend reversal. It consists of 2 candles with opposite directions but identical extremes. In a downtrend, they share the same lows, and in an uptrend, they share the same highs. These extremes can be either the closing prices of the candles or their shadows. The candles in the combination can appear consecutively, or there may be one or more candles between them. What to do when you see a signal? Monitor the chart and wait for a candlestick with the same extremes to appear, preparing for a potential change in direction. Once the tweezer is formed, you can open a trade in the new direction. If the tweezer appears near support or resistance levels, it strengthens the signal. In this case, you can act immediately without waiting for the confirmation from the next candle. Use the tweezer strategy in combination with other indicators such as RSI, MACD, or moving average. These indicators help to confirm the signal from the pattern.
How to use the ADX trading strategy. Today, we will show you how to use the ADX strategy for quick trades starting from 5 seconds. This strategy is based on the ADX indicator, or Average Directional Movement Index, developed by engineer and trader Wells Wilder. ADX helps determine the strength and direction of the trend, which is especially useful for quick trading. The indicator consists of 3 lines. The ADX line is a smoothed moving average of the difference between the other 2 components, plus DI and minus DI. The higher the ADX value, the stronger the trend. The plus DI line, or positive directional indicator, measures the upward movement of the price and helps to assess how much the price is moving upward. The minus DI liner, or negative directional indicator, measures the downward price movement and shows how much the price is moving downward. If the ADX value is above 25%, the trend is considered strong enough to open trades. How to set up the ADX indicator for quick trades. Set the DI length and ADX smoothing values to 5. Watch the direction of the plus DI and minus DI lines. If plus DI crosses minus DI from bottom to top, the trend is upward, and you can open an up trade. If plus DI crosses minus DI from top to bottom, the trend is downward, and you can open a down trade. To improve the accuracy of ADX signals, we recommend using it in combination with RSI, Stochastic Oscillator, and Bollinger Bands indicators.
How to use the 3-method strategy. Today, we will show you how to use the 3-method strategy for quick trades starting at 5 seconds. 3 methods is a candlestick pattern that signals a trend continuation after a small pause. It consists of at least 3 small candles appearing on the chart after a long candle, following in the same direction. The key is that these small candles should stay within the range of the previous long candle. How to use the three-method strategy for quick trades. Pay attention to a strong candle that goes in the direction of the trend. If it is followed by several small candles, get ready to open a trade. Wait for the formation of a large candle that moves again in the trend's direction. Once this candle closes, you can open a trade in the same direction to catch the continued movement. Use the three-method strategy along with indicators such as RSI, MACD, or moving average. These indicators will help confirm the signal provided by the pattern. How to use the Bears Power trading strategy. Today, we'll show you how to use the Bears Power strategy for quick trades starting at 5 seconds. This strategy is based on the Bears Power indicator developed by Alexander Elder. The indicator helps traders gauge the strength of the bears, that is sellers, in the market by measuring the difference between the minimum price and the exponential moving average, EMA. If the indicator value is positive, it indicates that the bears are dominant. If it's negative, the bulls are dominant. How to set up the Bears Power indicator for quick trades. Set the EMA period to 13. This is the optimal setting for short-term trades. Open an up trade when the Bears Power indicator crosses the zero line from below, confirming increasing bear strength. Open a down trade when the indicator crosses the zero line from above, indicating weakening bear strength. For greater accuracy, use Bears Power in combination with other indicators such as RSI or moving average. How to use the reversal trading strategy. Today, we will show you how to use the reversal trading strategy for quick trades. This strategy helps identify ideal entry points by recognizing that prices often bounce off key levels. How to set up the reversal strategy on Pocket Option. Open the chart and select the asset. Use drawing tools to mark key levels where the asset's price has struggled to move up or down in the past. Mark the level where the price has stopped multiple times and started rising. This is the support level showing the floor, where buyers become more active, preventing further decline of the price. Mark the areas where the price has reversed downward multiple times. This is the resistance level indicating the ceiling, where sellers step in to prevent the price from rising. When the price reaches a key level, support or resistance, and the candle touches it but doesn't close beyond it, this indicates that the price cannot break through. If the next candle moves in the opposite direction, this confirms the entry signal. Open a trade in the direction of the bounce if there is confirmation and the candle moves away from the level. Open buy trades if the price bounces off the support level. Open sell trades if the price bounces off the resistance level. For automatic identification of support and resistance levels, use the Bollinger Bands indicator. How to use the CCI trading strategy. Today, we will show you how to use the CCI strategy for quick trades, starting at 5 seconds. This strategy is based on the CCI, Commodity Channel Index indicator, created by Donald Lambert in 1980. CCI helps determine when an asset is overbought or oversold, which can indicate a potential price reversal. How to set up the CCI indicator for quick trades. Set the CCI period to 14 to make it more sensitive to short-term price movements. Watch for overbought and oversold signals. Open an up trade when the CCI falls below -100. This indicates an oversold condition and the price may start to rise. Open a down trade when the CCI rises above +100. This indicates an overbought condition and the price may start to fall. Combine CCI signals with other indicators such as RSI or MACD to improve accuracy. How to use the moving average strategy. Today we're going to show you how to use the moving average trading strategy for quick trades starting at 5 seconds. The simple moving average, or SMA, is an indicator that helps us see the overall direction of the market by ignoring random fluctuations. Using two SMA lines with different time frames, we can get signals to open a down or an up trade. The first indicator is fast, reflecting price changes over a short period of time, while the second one is slow, showing the overall trend. Go to the Indicators section, select the Moving Average indicator to enable multiple SMA lines on your chart. Click on the editing icon next to the indicator name in the top left corner of the screen to adjust the SMA indicator settings. Set the time frame in the window that appears. For quick trades, the first SMA line can be set with a time frame of 3 seconds. It'll be the fast line. The other SMA line can be set for 5 seconds. It'll be the slow line. Choose color and thickness. Click on the Save button. When the fast SMA crosses the slow SMA from bottom to top, it signals to open an up trade. When the fast SMA crosses the slow SMA from top to bottom, it signals to open a down trade. Let's take an example. The fast SMA crossed the slow one from bottom to top here. We can also see a sharp spike in price. This was a perfect moment to open an up trade. In this case, the fast SMA crossed the slow SMA from top to bottom, and the price went down. It's a great moment to open a down trade. Experiment with different time frames and number of SMAs depending on the volatility of the asset and the expiry time of the trade. How to use the Donchian Channels trading strategy. Today we will show you how to use the trading strategy based on the Donchian Channels indicator for quick trades starting at 5 seconds. The Donchian Channels indicator was created by Richard Donchian and helps traders determine the minimum and maximum prices of an asset over a specific period. It consists of 3 lines that show the upper, lower, and middle prices of the asset. How to set up Donchian Channels on Pocket option. Open the chart, select the asset, and find the Donchian Channels indicator in the Technical Tools section. Set the recommended period size to 20. Open buy trades when the price rises above the upper channel line and the asset breaks the maximum. Open sell trades when the price falls below the lower line and the asset breaks the minimum. The Donchian Channels indicator can also be used not only to determine minimum and maximum prices, but also to analyze volatility and future price movements, similar to how Bollinger Bands work. When the channel lines narrow, it may indicate that the market is anticipating significant movement. In this case, if the price breaks through this narrow channel, place buy or sell trades depending on whether there is a sharp move upward or downward. This strategy is excellent for short-term trades and allows you to react quickly to price movements. How to use the ZigZag trading strategy. Today we'll show you how to use the ZigZag strategy for quick trades starting at 5 seconds. This strategy is based on using the ZigZag indicator. ZigZag is particularly useful for identifying short-term price movements in quick trading situations. This is one of the earliest indicators. It was used at the stock market. Its creator is not known. How to set up the ZigZag indicator for quick trades. Set the deviation to 2 to track minor but important movements. Set the depth parameter to 1 to make the indicator react faster to price changes. The backstep parameter should be equal to 1, which minimizes the redrawing of the indicator lines. Open an up trade when a new low point is formed and the line starts to move up. Open a down trade when a new upper point is formed and the line starts to move down. Use the ZigZag indicator together with volume indicators or oscillators such as RSI or MACD to confirm signals and increase the accuracy of your trades. How to use the stochastic trading strategy. Today, we'll show you how to use the stochastic strategy for quick trades starting at 5 seconds. This strategy is based on the use of the stochastic oscillator indicator. The stochastic oscillator is an indicator that shows the current price position relative to its previous highs and lows. It consists of two periods, the fast %K and the slow %D, and helps to identify moments when an asset might be overbought or oversold. How to set up the stochastic oscillator indicator for quick trades starting at 5 seconds. For example, you can set periods like this: %K to 5, %D to 3, and the smoothing period to 3. Watch for stochastic line crossover signals. When the fast line crosses the slow line from bottom to top, it is a signal to open an up trade. If the crossover occurs from top to bottom, open a down trade. Use the stochastic indicator in combination with trend analysis for better results. How to use the envelopes trading strategy. Today we'll show you how to use the envelope strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the envelopes indicator, which was first used by Chester W. Keltner. The envelopes indicator consists of two SMA lines that frame the price chart. It helps to determine when the price of an asset becomes too high or too low compared to the average price. How to set up the envelopes indicator for quick trades. Set the period to 14 to make the indicator more sensitive to short-term price movements, and set the percentage deviation at 0.05%. Watch how the chart crosses the SMA lines. Open an up trade when the chart crosses the SMA from bottom to top. Open a down trade when the chart crosses the SMA from top to bottom. Combine envelope signals with other indicators such as RSI or MACD to improve accuracy. How to use the Keltner Channel trading strategy. Today, we will show you how to use the Keltner Channel strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the Keltner Channel indicator, developed by Chester Keltner in the 1960s, which helps traders identify when an asset's price deviates from its average, which can signal a possible trend reversal. The indicator consists of 3 lines: a middle line based on the exponential moving average, EMA, and 2 outer lines that are created using the ATR, average true range, indicator, and a multiplier. How to set up the Keltner Channel indicator for quick trades. Set the EMA period to 20, the ATR period to 10, and the multiplier to 2. Open an up trade when the price touches the lower channel line and starts moving upwards. Open a down trade when the price touches the upper channel line and starts moving downwards. For increased signal accuracy, you can combine the Keltner channel with other indicators like RSI or MACD. You can learn how the MACD or RSI indicators work in these videos. Try now. Follow the link in the description.